Me, Mr. Pankaj Pandey. And as we speak, sir, I think we're sitting very, very, very close to those highs at one time, which looked very high. Uh, what is the outlook right now? And once again, the question is also once again, I hope to discuss in this episode. Ki again, is the market overvalued again? Because last time when we were at 26,000, everybody was panicking that we're too high level. So let's start with the broader outlook first. What do you think about the market right now?
Oh, yes, Vishnu. So, good evening. While the market is still not at a lifetime high, but it's a 8-month high at 25,500 kind of levels. And it's not only us, even the S&P 500 in US is closer to near-time or all-time high levels. So Nifty is performing in tandem with global markets. We've seen small caps doing very well, 4% kind of move this week. Metals and PSU Bank fortunes have changed for this again 5 to 3 to 5% kind of a gain there. I think good part is that one worry was the crude oil. I think crude oil move has sort of fizzled out. So from 78, it has come down to $68. And I think overall our sense is that Nifty has broken out of this range of 24,500 to 25,200. So which is why the range has shifted now. The supports will be somewhere about 24,900 kind of a levels, and 25,800 is on the higher side. But having said that, I would want to believe that in the next, probably towards Diwali or towards this year, and we should be easily touching new highs. Fundamentally, our sense is that Nifty should be placed somewhere about 27,000 kind of a levels. And some more interesting things for the upcoming month, because July has been one of the most productive months for the market since 1991. I mean, 70% of the time it has delivered an average return of 2.5%. So we can keep our fingers crossed there as well. Uh, and it's not only the large caps or Nifty sort of doing well, the market depth has also sort of improved. We have 80% of the stocks which are trading above 50-day simple moving average, or 60% trading about 200-day moving average. So from that perspective, it's a very broad-based move what we are seeing in the markets. And good part is that after a long time, Bank Nifty has been sort of doing very well. A lot of these stocks have done well, including the likes of HDFC Bank. And I think banking will continue to do the heavy lifting largely because a lot of measures have been taken by RBI in the recent past. And FI flows have started to sort of resume. So obviously it benefits the banking more. And if we go by Trump tweets, hopefully the bilateral trade agreement also with US might come by. So all in all, everything is in store for markets to sort of make a new high. So we would expect markets to make a new high. Fundamentally, our target is 27,000. But I think 26,300 can be possible even in next month. And I'm keeping my fingers crossed for it.
Absolutely. Let's get to the valuation part of it, sir. Last time when we were at these levels, everybody was concerned. We were getting news from all across that the P is very high, the valuation is not justified. What do you think about the market right now?
Yes, Vishu. I think the only negative which always gets highlighted for India is the high multiples, and I would want to sort of break that. See, historically, Indian markets have traded at P multiple averages of say 16 to 17 times, and now we are trading at about 20 times on a FY27 basis. So obviously, compared to historical past, things look a lot higher. But I think one needs to sort of break this higher P into number of factors. One, I think, is because of the fact that after a long period of time, I think India is one of the few markets where one can think of 6 to 7% kind of a consistent GDP growth rate. You have best of the corporate balance sheets. There is no major asset quality concerns in a big sector like banking. So most of the macros are in place for GDP to sort of do well and corporate earnings to sort of do well. That is one. So longevity of earnings is in India is the highlight at this point in time. The other thing is that see, we are also seeing a lot of changes in the index itself. I mean, just to highlight that, let's look at last two inclusions and exclusions. So what got excluded was BPCL and Britannia. Now both of them have a half a percentage in the weightage. a combined profit of nearly about 20,000 odd crores on FY27 basis, and market cap of somewhere about, I think, closer to, I think, 2.3 or closer to those kind of a number. So they're trading somewhere about 13 to 14 times on a forward basis. Now, when you sort of take at what has sort of come by, so you have seen the inclusion of Eternal, which is Zomato, and Geo Financial. Now, the combined market cap is somewhere about 4.3, 4.4 lakh crores, and the profit pool is literally one fourth of what the outgoing has been. So, combined basis, they are going to make a profit of somewhere about 5,000 odd crores on a FY27 basis. So, you're literally adding two companies at a P multiple of 96 times on a forward basis. And mind you, Nifty is again a weighted average of the kind of stocks which are there in the index. And which is why I feel that it is wrong to compare with historical perspective. And in fact, we have seen even the traditional businesses also sort of changing their business dynamics. I think Reliance is a classic example. Reliance, out of the overall market cap of nearly 20 lakh crore, the bulk of the value, about 12 to 13 lakh crore, is expected to come from Geo. Reliance traditionally has been a very, what do you call, oil and gas company. So from that perspective, Bharti is trading at 30 times. So Reliance is or Geo is expected to trade at around these multiples. So business models are also changing. We are seeing changes in the index, and which is why I feel that it is wrong to sort of look at the previous historical number and to sort of come to a conclusion that the multiples are high. I think we should take it with more confidence that India is one of the few economies which are going to deliver a very sustained growth. So, according to me, these rich multiples are here to stay, and in case if we sort of keep getting higher growth business models, then the multiples probably can expand as well.
Absolutely. So, one of the reasons last time market fell was, of course, FIIs, and after that, we saw a resilience from domestic investors. What change do you see in this aspect? What are our domestic institutions sitting at now?
So yes, so what we have been highlighting or largely or speaking about is the monthly inflows, what we are seeing. But I think what also needs to be seen, Vishu, is whether this money is really put into markets or not. Now, our sense is that mutual funds are sitting on a dry powder of somewhere about 1.7 lakh crores. And I'll quote some examples. So, for example, hybrid in a hybrid again, you have BAF funds. So, BAF funds typically invest both in equities plus debt and plus some arbitrage. Our sense is that at this point in time, BAF funds average holding is about say 40%. In normal scenario, this number can go up to about or 45%. And normal scenario, the equity allocation could go up to about 60 odd percent, which means that they're sitting on a dry powder of nearly 57,000 odd crores. And just to sort of give an example, HDFC AMC's BAP is roughly has got an AUM of about a lakh crore. Usually, in good times, they have invested up to 70% of that money into equities. Currently, they have invested about 50 odd percent. So they still have legroom to sort of go up. And same is the case with the flexi cap or even a lot of whether it is a small cap, large cap, mid cap. I mean, typically the average cash holding in normal scenarios between 3 to 5%. Whereas when you look at in a segment like say small cap, mutual funds are sitting on a cash of nearly 7.5%. And I think if the market keeps on doing well, somewhere down the line, this money also will come into the markets, and that is going to sort of do a more broad-based rally in the market. One more interesting thing is that of the overall inflows, now 37% of the inflows are into mid caps and small caps, and this number used to be about 22 odd percent 2 years back. So from that perspective, I think allocation is again more towards less towards large caps and more towards mid caps and small caps, and that is one of the reasons we have been liking markets across be it large caps, mid caps, and small caps because domestics are now sort of are a good counterforce to the FI flows. I think last year we had out FI outflow of nearly 1.2 lakh crores, and despite that, markets were in positive territory. So from that perspective, I think Domestic flows have been good, and mutual funds sitting on cash, a good amount of dry powder, gives us confidence that new high is very much on the cards in the upcoming months.
Absolutely. Let's talk about something different, sir. I think social media in the past few months has been abuzz with news about obesity control drugs or diabetics control drugs. Monjaro was being talked about everywhere, and now I think there are a few more entrants have now started looking at it. How do we look at it from an investment opportunity in India?
So yes, so a lot of news flows are there, like you highlighted, Vishu. Uh, I think since we carry a large population, so in India you have about 10 crore diabetic patients. There are about 13 crore pre-diabetic population, and this pie itself is growing at about 10 odd percent. And there are various estimates, but there is the one estimate which says that about 35 to 40% of the Indians are obese. Now, globally, we are seeing good amount of traction in this particular space because there is drugs, or we have got drugs which cater to same family of drug which cater to the same or both the conditions. So, for example, semaglutide is a API which is used for making both drugs for treating diabetic conditions and also for obesity. Now, in India, we have seen that earlier this was launched by in India overall. So Novo Nordisk, for example, had launched in India in say FY22, and this has become a 450 crore kind of a drug. And now we are expecting Eli Lilly to sort of do something similar in terms of whether they'll be launching or they'll be sort of tying up with existing players like say Lupin or Cipla to launch this particular drug, because the opportunity size itself is very huge given the large segment of the population what we carry. And mind you, this segment is going to become even more larger when this semaglutide loses exclusivity or patent in January 2026, and which again will open up a generic opportunity for a lot of players, be it Sun Pharma, Natco, Mankind, DRL. So it's a fairly large opportunity which is going to sort of unfold, and I think domestic market itself is going to be a lot more bigger, because what had been launched by Novo Nordisk was an oral drug. Again, oral drug has limitations in terms of its effectiveness, because drug, if it is given through a vial or an injection, is far more effective. So from that perspective, I think the modes of delivery is also sort of going to expand. And besides, obviously, like I said, that we carry a fairly large population. So I think interesting times ahead for this crucial drug. A lot of it is at stake, and a lot of players are vouching for this opportunity. I've already named some of them.
Absolutely. Let's talk about paint sector. I think since last year it has seen a lot of shakeup. This industry has seen a lot of shakeup, and now there's the news that JSW Paints is acquiring Akzo Nobel. I think that is also going to change the dynamics quite a bit. How do you look at it right now?
Oh yes. So paint is one sector which is suffering from price competition. We have already seen margins being low. In fact, the volume also has been tepid for a big company like Asian Paints. I think volume growth was 2-3 odd % past 2 quarters. Probably that might change over the next few quarters, given the fact that real estate as a segment is doing well, and plus repainting demand usually happens during the festive season. Now coming to M&As, so again, the sizes are quite different. I mean, so for example, Asian Paints has got a capacity of nearly 22 lakh or 23 lakh kiloliters, whereas ExxonMobil is only 2.5 lakh. So ExxonMobil is typically 1/10 of the size of Asian Paints. So I think we should not be really comparing Akzo with Asian Paints. I think Asian Paint is a giant. But having said that, entry of JSW changes or makes the case a lot more interesting. JSW is known to be fairly aggressive. They have done very well in a segment like steel. Similarly, they have done very well in a segment like energy. They are venturing into auto. So as a group, they are pretty aggressive, and it is expected that they will sort of do a fairly good job in terms of competing. With this merger, they have become the fourth largest player. Valuation wise, it's more comparable, I would say, to something like Kansai Nerolac because there the share of the decorative paint segment is less. For Akzo Nobel, it's about 45%. So compared to that, Asian Paints is a lot more higher. And which is why, for example, Asian Paints might be trading at 46, 47 times forward P multiple. This is at about 25, 26 times. So valuation looks reasonable. What will become more interesting is what JSW does from here on. I would want to believe that, like they have been very aggressive, they would want to sort of pursue this opportunity once they acquire very aggressively, and that might lead to further more price competition for some period of time. So I don't expect this paint sector to sort of do well till the time industry is competing on prices, and it is going to compete on prices for some time. So again, price damage is largely done. I would expect nothing much happen to the stock prices, so you'll see more of a time consolidation.
Absolutely. So the next sector that I want to ask you about is the electronics manufacturing sector. I think a few years or decades ago, India didn't really stand anywhere, but today we have a slew of domestic players in India, and the government is supportive. The global dynamics are forming such that it may be in a good position. How do you look at the sector, and where are the investment opportunities really?
Oh, yes, you rightly highlighted that. I think India is emerging as a generation which can be a sort of a good counterweight to China from this perspective. While it is going to take us a good amount of time to do some bit of a catch up, but from a growth perspective, I think this sector is expected to deliver about 27% kind of a growth rate. So nearly from 3 lakh crore kind of a size to nearly 8 lakh crore kind of a size in the next 4 years. So this segment is definitely poised to do well, and it's already doing well, largely because of the support given through PLI schemes. Custom duties have been made a lot more favorable than on top of it, their state incentives. And I think most of the global countries have realized that they need to sort of do less reliance on China, and which is why it is benefiting India. Now, here you have companies like Dixon and Syrma, which are expected to sort of benefit. I think Apple contract manufacturers are not listed, so we can't really sort of chase that. But on the non Apple side, what we are seeing is that Dixon and Sigma as good candidates. Now, Dixon, again, the target price for us is about 20,000. This company derives 75% of their revenues from mobile. So I think they produce somewhere about 2.8 crore kind of a volume in FY25. That should inch up to 6.5 crore by FY27. And the volume growth is expected to be good. Domestic growth, export growth, both of them are looking good. One more good thing is that we are also inching up in terms of value addition. So this company is investing in display and camera modules. So overall value addition should also inch up from say 18% to nearly 35, 37 odd percent, which means that their margin profile should improve from 3.9 to 4.6. Sum total expected to deliver about 40% kind of a growth rate. Bottom line growth could be 65%. And no wonder it does not trade cheap, but we still like the stock for it for the growth it can deliver and for the opportunity it can tap. Sirma is slightly different because it's a slightly diversified, not mobile heavy. So this is one company which is there into a number of segments: automotive, industrial, healthcare, consumer, railways, IT. So it is there in a number of sectors. Plus, export is also a big leg for them. 23% of their export of revenues come from export. Now, this company is talking of 35% kind of a growth rate. Again, margin profile is expected to sort of improve because they would want to take the export share higher going forward. So from that perspective, this company is also a company which is expected to deliver a good growth rate of nearly 28 odd percent on revenues and nearly 37% on the bottom line side. And this also is another stock which we feel can be used as an opportunity to play this entire EMS as a space with a target price of about 640.
Absolutely. Next up, I want to talk about in particular Tata Power. I think it has been doing a lot of good stuff and has been in the news for a lot of things. How do you look at this stock right now?
So in fact, Vishu, the entire distribution space we've been highlighting is expected to do very well. I think power generation is already seeing good amount of traction. We are on our course to add or to have capacity of 500 gigawatt. I think distribution side, a lot of reforms are required, and that is where the biggest pain area for a big sector like power is. But yes, there are structural improvements which are underway. So I think TND losses have come down from say 26, 27 odd percent, I think 13, 14 years back to nearly about 16 odd percent. Then the government is estimating overall capex of nearly about 9.5 lakh crores there. And I think private players have a big role to play there, especially in the power distribution side, because what we have clearly seen is that whichever market they operate into, I think we have seen a fairly a good amount of turnaround. And I think Tata Power has been a sort of a key player there. Uh, in the distribution space itself, their profits have grown at about 22 odd percent to nearly 1,500 odd crores. And they've acquired past distribution licenses in places like Mumbai, Odisha, Ajmer, and they have done fairly well. While they are into other segments like power generation, also they would be venturing into SMR or small nuclear reactors as well. But now what they're clearly looking at is they're looking to sort of distribute electricity in various pockets of Maharashtra. So they are looking beyond Mumbai city. So they're looking at Chhatrapati Sambhaji Nagar. They're looking at Igatpuri, Nasik, a number of other places. Now, what it does is that systematically they will be able to offer far more efficient services, and they will be able to minimize these AT&C losses to a great extent, which again means that the overall profile or the value chain improves. See, typically when you look at a rural space, a lot of times the transformer burns and there is no power, despite the fact that there's a requirement for power, because you need to invest a lot of amount of money on the transformer side. And that has been the pain area. If the companies or discoms are not making money, they can't invest. And which is why you need private players to sort of bring in that kind of an efficiency. So Tata Power looks like a play on the entire value chain. And I think within the power space, this will be our top pick with a target price of 530.
Absolutely. And finally, sir, it's time for the hidden gem of this week. Which will it be this time?
So Vishu, we've been liking transformer segment or the overall power transmission and distribution. So I would want to recommend a company called Transformer Rectifiers India Limited with a target price of 640. Now this company makes a wide range of transformers for power transmission and distribution side, furnace transformers, rectifier, special transformers. So they are into a number of things. Good part also is that they are expanding their capacities from say 40,000 MVA to nearly 75,000 MVA in FY26. Their order wins have been pretty good, about 4,500 odd crores in FY25. And they are expecting order inflows, or they would secure orders to the tune of about 6,400 odd crores. So their order book will swell to nearly 8,000 odd crores. And their revenues had grown to about 2,000 odd crore last year, so which was a growth of about 56 odd percent. We had seen a fairly good jump in margins to 16%. Profit had moved nearly 4.5 times to 219 crore. So our sense is that given the shortage which we are seeing in transformers, not only domestically but even globally, most of your transformer manufacturers are very well placed. So you have big players like BHEL, you have big players like Siemens, all of them make transformers. So we are liking the entire value chain, and this company in particular. Our sense is that this company will deliver 50% plus revenue and bottom line growth. And we have valued it at about 640 with a target price of 640. That is our target price, valuing it at about 38 times on a forward basis.
Absolutely. Well, that was it for this time. Thank you so much, Pankaj sir, for your insights, and thank you so much, everyone, for watching. If you have any questions, please put them down in the comments, and we'll try to get back to you. Thank you so much again.
Thank you.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.